Hey folks, Dan Frio here with your real estate update for January 29th, 2024. We're going to talk about in this episode is I'm going to tell you exactly what the Federal Reserve is going to do at this week's meeting. Then we're going to go over bankruptcy filings. They've spiked up. We're going to go over housing inventory. But the first thing we're going to go over is mortgage rates and the economic calendar for today. So without further ado, let's get to it. My name is Dan Frio. I'm a mortgage advisor licensed in all 50 states as well as Puerto Rico. I would love to help you if you're looking to buy a house in 2024. Maybe you're looking to buy your first investment property, or maybe you've closed on a loan in the last year and you're like, hey Dan, can I refinance at any point? Those are the things that we discuss on a daily basis. So without further ado, let's get to it. Here's the first thing we do on a daily basis. We talk about what in the heck's going on with mortgage rates. They've basically been flat, and they're going to be flat all week, basically until the Federal Reserve comes out and tells us exactly what they're going to do. So what are they going to do? Well, let's get to that in a second. But these rates right here, these are your rates, okay? What I mean by these is this is your rate most likely if you have this criteria, because what happens on a daily basis is Mortgage News Daily, they survey lenders all over the country and ask them these 5 questions. If you had somebody buying their first house, it was a single family home and they were going to live there, so it was their primary house. They had a 780 credit score and they're putting down 25%. That's not even 90% of you guys. But if it is, that's your rate. If that's not your criteria, please, I'll give you my information at the end of this video so you can reach out to me to figure out, can you buy a house in this market? What interest rates would you qualify for? Which program? And what would those payments look like? But without further ado, let's get over to our data for today and start breaking it down. So you can see right through here, there is no economic news out for today on Monday. On Tuesday, we have the consumer confidence and the JOLT index. And then on Wednesday, we have the Federal Reserve meeting. So they're going to come out and tell us exactly what they're going to do. What are they going to do? Well, here's the probabilities. So let's go up through this. What is this that we're looking at? Well, this is the CME FedWatch tool. This was created by the Chicago Mercantile Exchange, and it says the Fed's meeting in 2 days. What are they going to do? Okay, so right through here, it tells you that. What's the likelihood that the Federal Reserve will change the federal funds target rate at the next meeting? Well, what you have to know or put into context is the federal funds rate right now is 5.25 to 5.5. Okay, so let's really break down what the probabilities are that they're going to keep rates the same. Maybe they're going to increase them. Maybe they're going to pause. Let's get to it. So if you scroll down through here, it's telling you the probabilities of each. This is probably the easiest one to read. So let's scroll down. I'm going to get my head out of the way for 1 second. So let's go down through here. And what's the probability right now? 97.9% that they're going to do what? They're not going to really do anything. Right through here, 5.25 and 5.5 is the federal funds rate right now. There is possibly a 2% probability that they're going to decrease rates. I think you can take that off the shelf. And then going throughout the rest of this year, here's the probabilities of what we're looking at the next meetings throughout 2024. This meeting, there's a 97% probability they're going to do nothing. Actually, in March, there's a 50% probability they're not going to do nothing. And then in May, that's when the cuts are expected to start hitting the markets. I'll say I'm probably on this bandwagon. They're not going to do anything in this meeting. March, unless we get some major data that's switching, showing inflation has plummeted and we're at basically 2.5%. I don't think they're going to do anything in March. I can almost assure you that in May, they're going to start to cut. So let's break down some other information that you're really concerned about. One thing is bankruptcies. The data that we're going to go over right now is kind of like, you ever watch Fox News and then you watch CNBC or CNN? You can have the same basically news, but it is so skewed one way or another. Okay, so here's what I mean. Many people are going to start saying, oh, bankruptcies, they are spiking. They're spiking out of control. Look, in 2023, they were up 17%. See, folks, there's going to be a recession. Everybody's going to lose their jobs. You're going to go into foreclosure. You're going to lose your house. You're going to lose everything because of this. Well, if you really break this down, you can see that it's 42% lower than pandemic levels. So how bad was it in 2023? If you go down through here, 2023 was the third lowest year in bankruptcy filings in history. So watch the data that you take in, because if you just leave it at its face value saying bankruptcies are up huge, well, you might think then, okay, the whole economy's starting to crack and it's starting to suffer. Well, please read all the data so you make sure you get all the context. The next piece of this is housing inventory. A lot of people are saying there's going to be a spike, a huge spike of inventory. That's going to cause home prices to crash. Well, let's look at it. Inventory is down 0.6% week over week. up 7.9 year over year. But let's take another deep dive into this. The research done on this page is done by Altos Research. We actually we're having a live event with Altos coming up this month. So please check out our calendar to check out that, because Altos is fantastic. They have a website that shows you, what exactly your market is doing, and it dissects that. Because why you need to know that is, well, if you live in, let's say, Dayton, Ohio, do you really care what Austin, Texas is doing? No, you need to make sure you get your own research. This is the tool to do just that. So let's go back to it. We have right through here, inventory. The next screen right through here, here's inventory. Here's the inventory levels that we have. So you go through here and people are saying, okay, there's a huge inventory spike. The data doesn't show it. Okay, you can see down through here. Here's the 2024 marks that we have so far. Look at the years, how many years that we haven't even caught up to these numbers up through here. So we're about halfway in the middle, or that's basically contradicting itself. We're right in the middle of where housing inventory goes. So this, I think you get the point here. There's not a huge amount of inventory coming to the market. You can see it right through here. Okay, so this is the Altos active inventory that we have right now. So again, what I talk about is housing, real estate, interest rates, mortgage programs on a daily basis. That's what we focus here on this channel. Altos Research, like I said, we're going to have them. Check out their YouTube channel. It's Altos Research. You're going to find a whole bunch of information. A lot of this information is going to be a little contrarian to a lot of the doomsdayers out there. But guys, this is the facts. This is the data. You can't argue the data. I had to talk to a young man the other day, and he said, if you have the facts, you need to pound the table on your facts. If you have the data, you need to pound the table on your data to get your point across. If you have neither of them and you're making this crap up, you're going to pound the table and just keep yelling at the top of your lungs, telling people how stupid they are, and if they're buying a house in this market. So make up your mind. All I want you guys to know is you do your own research, and these are some of the tools that we offer, and we're trying to help you guys find and use. Okay, so that's the data for today. So based on the information we have today, which is really nothing, everybody's waiting for the Fed to come out. What's going on with mortgage rates? Well, what we do on this channel is we watch the mortgage bond market. This is right here, the MBS market. This is a bond that trades on Wall Street. Okay, the yield on this thing is the biggest component of your mortgage rate. So that's why we follow this. We don't follow the 10-year Treasury. We don't follow, the S&P 500. We don't follow the NASDAQ. We follow the mortgage-backed security bond. Basically, what you need to understand is this. This is the price of the bond. If you squint, I got a green screen, so that's why this doesn't come up much, it's up 11 ticks. Here's what you need to know. If a bond is up in price, that means the rates are coming down, okay? If the price goes down, that means rates are going up. So if you go back to our channel at the beginning and you look, mortgage rates were in October 8%. Now they're at 6.9%, so quite a bit lower than where we were. So here's how this works. Back here, at the end of November, or beginning of November, end of October, this is where rates were 8%. Then you had this huge rally. Rates got to about 6.3% right through here. And then they've eased up just a little bit. You can see that's a kind of an upward tick. And this is exactly what's going on with the bond markets, the mortgage-backed security markets. So that's why we had rates at 8. Rates went down to 6.25 or so, and now we have rates at 6.9. So this is what you need to follow if you're trying to figure out what in the heck's going on with mortgage rates. So that's my report for today. Like I said before, I'd give you all my information at the end of this video. If you're looking for some assistance trying to buy your first house this year, maybe trying to buy your first investment property, if you're self-employed out there and you're having a tough time, reach out to us. We specialize in self-employed people. We have programs such as bank statements, 1099 statements, profit and loss statements, a whole slew of information here for you. So again, my name is Dan Frio. I do this report every day. I'm a mortgage advisor licensed in all 50 states as well as Puerto Rico. Love to help you. How do you reach out to us? Well, go to therateupdate.com and here it is. You're going to find a whole bunch of tools up here, guys. Check them out. There's calculators, there's blogs, there's all kind of other resources, but you can click the button right there and hit the Apply Now button. What we do is a little bit different. We don't just send you off to our application link. What we do is we ask you a series of questions. We want to know about you. We want to know things you're looking for. We want to know about your credit. And then I'm going to take that data and set you up with a mortgage specialist on our team that specializes in exactly what you're looking for. You can also reach us by phone or email. How to do that is scroll to the bottom of our website. You're seeing right through here. You're going to find our 800 number as well as our email address. It is right there. 1-844-775-LOAN, or reach me at dan@therateupdate.com. Thanks so much for watching, guys. God bless. And if you've liked this video and other videos I do, please, if you haven't yet subscribed, well, please do that down below. Please check out also a lot of the available tools that we have down in the description below. I think you might find those useful as well. Take care, guys. God bless. I'll see you tomorrow. Bye-bye.